right, folks, strap in because today's video is a full throttle dive into some explosive content between CJ Constantinople and Opti over at Simply Bitcoin. They were at the Bitcoin conference last week in Las Vegas, and man, there was some explosive takes throughout this entire thing. I'm not going to cover all of them. I highly recommend you come and watch this because there was just some solid gold nuggets dropped. I'm going to cover a few of them, but the TLDR is you need to be in Bitcoin and we are far from over. So stay tuned.
Bitcoin is booming. Are you cashing in or missing out? At Drip2 BTC, we're rewriting the rules of Bitcoin investing. Earn up to 30% ROI on your deposits, unlock incredible Bitcoin discounts, and transform credit into up to 3,000% APR growth. No hassle, just real results. Don't wait, your future is one deposit away. Drip2BTC.com. Invest smart today.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. So as I said, CJ Constantinople, he's been on the show multiple times and he's shared some insights multiple times and has pretty much been spot on with a lot of his predictions and ideas. And these feel exactly the same. So we're going to cover a couple of different clips, starting kind of with a precursor of kind of what we've been doing with Jack and some of the other stuff. It's like where we are and how we got here, and then where do we go from here. So again, TLDR is that Bitcoin is the life raft. It is the only thing to save us from this debt-based slavery, inflation, tidal wave that is coming to just consume everything. That sounds like doom and gloom, but when you actually look back historically at some prices of things, and I'm going to show that in here because he alludes to that, and then there was a Twitter post on that as well. It's like, yeah, it's been happening before our eyes, and it's so interesting to me that I understand it now, but it was so blind to it for the last 30 some odd years, and now it just seems so transparently obvious. It's like, well, how did I miss this? And then the crazy thing is, I forgot who made this quote, but 95% of all Bitcoin has been mined, and 95% of the world's population does not own Bitcoin. Just let that sink in. So it's like the writing's on the wall. They've been beating this drum for 13, 14 years, and still so many people are asleep, and they're going to miss this opportunity. But anywho, I've ranted long enough. Let's go to this first clip about the system pulling apart at the seams.
And I'll tell you what, it's unbelievable where we are right now. Everything that we were concerned about, everything that we warned about is literally happening right now. So people, you guys really need to, if you haven't already, step it up and start stacking the hardest you've ever stacked before. Bitcoin's crashing right now, right?
Yeah, 106, it's over.
It's crashed, it's over, zero's next. No, guys, what's happening is the financial system is pulling apart at the seams. Japan is losing control. There's probably some type of stealth yield curve control going on, not only in Japan, but here in the United States of America as well. The US 10-year Treasury is inching up towards 5%. I've been wrong about that rate going above 5% since 2022. But what I haven't been wrong about is if we breach that 5% rate, everything will unravel. Literally, bank term funding program number 2 will kick into gear. Everything will fall apart. The banks will have to print. There will be a bank term funding program. They will print like they've never printed before. Of course, that's quantitative tightening, right? That's less money in the system.
Yeah.
The more they print, the less money there is. The opposite of what is happening. We are now seeing fake news into fake finance news. Everything is like great for the economy. I've seen some people on Twitter, everything is so good, everything is so strong, the GDP numbers look so great. Yeah, well, when you pretend that CPI is like 1%, then yeah, everything is fantastic. But when you look at the reality, everybody out there knows when you're stacking your sats and you're saving, oh man, why can I save less this month than I did the previous month? Because the prices are going up higher, harder, and faster. And
that's the same thing that Jack mentioned on his, I think he was on at the recent Bitcoin conference, is when you look at the debt, like, you know, he said the joke, but it was from an actual article of debt to buy a cheeseburger, the Uber Eats news article that's like eat now, pay later. And as CJ just mentioned, it's like, yeah, the cost of everything is going up. And that brought me, or I saw this literally today in my feed, and I reposted it, and it says the McChicken proves you are a slave. 2016, McChicken was 99 cents. 2025, it's $4.59. 364% inflation on processed chicken slime. Meanwhile, wages from 48K in 2016 to 66K, and that's a 37% wage growth. So basically, they are 10xing the inflation rate compared to what you're actually making in wage growth. and the dollar's melting, your savings are vapor, your rent is up 50%. And I had to look this up because I was like, damn, like like I said, I've been back in the US now for a week and some change, and I'll be here for like another 2 to 3 weeks or whatever. But I did see that with some of the price of things in my area, but I haven't really paid too much attention to it because I've been overseas, and that's why I'm leaving again, because it's like, that's crazy. But this made me want to go look at McDonald's prices. And sure enough, so actually if you scroll down here, I think I saw the McChicken, there we go. So it says $3.10. So depending on where you're at, that's still a 310% increase, which makes absolutely no sense. Like this right here, I can remember this. Like I worked at McDonald's in high school, and I can remember these were 99 cents. It was on the 99-cent menu. Like no shit. So was this. That was before 2015. I'm older than that. But the point is, regardless of when you zoom out, so if I can go back to what I can just take a look at, and you're looking at 30 years, so that is 100% year after year, basically, of inflation, then your wages and everything else are just not keeping up. When I saw this menu, and I don't eat here at all, I haven't had McDonald's in like over a decade, but I just saw these prices. I was like, Jesus Christ, like this makes no freaking sense. Remember, cheeseburgers were like $2 for $1. I'm sorry, hamburger was $2 for $1, like 59 cents, 69 cents, something like that. So I was just like, this is absolutely insane. I don't get it at all. But that does echo exactly what he was talking about. So it's like, yeah, the prices are going up, but you can sit there and believe the false narratives and lies the media is telling you about, yeah, it's 2%, it's 2%. It's like, no, do the math yourself on the amount of years you've been on this earth and looking at the price of goods for things you buy. And if it's 2% per year, then you should be able to quantify that by, 20% in total, 30%, depending on how long you've been buying. And none of us have probably seen that. It's definitely in the hundreds of percent increase. And the quality of those items have gone down since then. So let's go into kind of his solution. What the next step actually is, like, how do you opt out of this slavery trap?
Perfectly. Buy your Bitcoin, self-custody your Bitcoin, opt out of the system. You want to know something funny? I could be with my family right now somewhere just relaxing, private island. But you know what? I overdrafted on my bank account the other day. I literally overdrafted on my bank account today. You should own the least amount of dollars possible at this point in time. You should be pulling out. Typically, I tell people, yeah, maybe you take out a quarter. Don't stress yourself. I mean, I'm month to month at this point. I do not trust these people at all. Nobody knows what the linchpin is. But just like with this grenade, you pull that linchpin, you sit there. We're just waiting for this thing to explode. That's where we're at this point. The pin has been pulled, and they're losing control of the narrative. They're losing control, most importantly, of the interest rates. And I'm really concerned. I'm concerned. Now, does that mean the banks are going to crash and everything's going to change? Absolutely not. Because you know why? Like they always do, they're just going to print the money. So the status quo is going to remain. You won't know if you're not listening to Simply Bitcoin, you're not following the news, you will not know that it's actually happening because they're just going to print over it. But over time, what happens is that $60 steak dinner is now a $90 steak dinner. I took my family to Outback Steakhouse the other night. I got 3 kids and my wife and me. It was $200. And we don't drink alcohol. We don't drink at dinner. We just got, and the kids shared a kids meal. It was $200. Unbelievable. And maybe like 5-6 years ago, we would go $80. $80. We're seeing over 100%, depending on how you live your life and what you buy. We're seeing over 100% since 2020. Over 100%. That's 5.
So that is, again, just kind of echoing exactly what I just said. So for him, $200 for an Outback meal with a family of 5. That is insane, as he said. So it used to be 5 years ago, $80. We'll call it 100. So it's gone up 100%, in 5 years. And the solution, like he mentioned as well, is what I've been telling you guys. Yeah, you have to opt out. So whatever amount of money you're making per month, you need to be stacking in Bitcoin. Keep just enough to pay your bills, and optimally get that into a stablecoin. We're gonna actually go to a bit of stablecoin news in this clip as well. Yes, of course, there is the custody risk, but right now you're custodying with banks, and those are at risk of defaulting just as much as a centralized exchange. So, and at least you get a better interest rate on stable coins than you do in your bank. Just food for thought. And that's why he said he has overdrafted because he's going basically every month or week or day or whatever into Bitcoin or something else. It's just simple math at this stage, and I never showed it to you guys, but just so you can actually see what I was referring to. So it doesn't matter whatever your monthly income is. The idea for me is that you take that amount and you decide what you want to DCA daily, weekly, bi-weekly, monthly. And the goal is to basically zero out. For me, this is definitely not financial advice, but the goal is to zero out your account so that whatever you're bringing in each month is going out into Bitcoin. And if you want to be safer or you still got to pay bills, like you don't want to do the loan-based strategy, then you say, let's say again, that for easy math, 10,000 is your monthly income, then, and maybe 50% is for your bills or 60% is for your bills. Well, then you'd have that the balance for bills stay in your checking account to pay your bills each month. And then the rest goes into your monthly. So if it's 60% for bills, that means you still have $4,000 a month that you can DCA into Bitcoin. Like that should be your goal. And then for me, what I've done is take the entire amount and 80% goes directly into Bitcoin and the other 20% is going into USDC. So I am not completely unbanked, but that's what I've been doing. And I will be unbanked probably by the time I am settled in South America. So I need some funds in my account right now to get ready to get Colombian pesos and find a place to stay. But once I'm settled, definitely by the end of the year, completely unbanked is my goal. Not financial advice, of course, but the system is crumbling right before your eyes, and you can see by the price of food, that is the easiest measure. Housing is a little more subjective, but something again like a McDonald's menu. I think there's even like the Big Mac inflation, something like that tied to Big Mac, so you can see how much it's cost over the years. That is a better indicator in my opinion. You don't have to eat McDonald's to be able to appreciate that. You can just see the simplicity of it and realize, yeah, we are getting screwed left and right. And that means they will default. And CJ is going to explain what that type of default actually means for you and me going forward.
Process. And the ongoing salt default process is one of my favorite gifts of Jerome Powell. Just burr it up, because that's what they're doing. Even right now during quantitative tightening, they're burring. And when they raised interest rates, I mean, I called this on your show. When they raised interest rates, inflation was still going to go up because the deficit is going to increase. You're going to need to print more money to service the debt. And now they raised interest rates. People sold off Bitcoin, real estate, stocks. $7.5 trillion went into lending into the government and different cash equivalent products. If they lower interest, why are they waiting to lower interest rates? Because the second they truly lower interest rates, not just a little 25 basis point low, $7.5 trillion will rush back into assets like Bitcoin, gold, real estate, and price. I mean, you think we have an affordability crisis now? You think the real estate market is frozen now? Wait until they actually try to lower interest rates to unfreeze the market. Prices are going to, but we're going to have COVID 2.0. It might even be COVID squared. How much did they print for COVID? 4 or 5 trillion?
I think it was 4. I think I saw it this morning. It was 4.5 trillion, I think. 4.5. That's probably the conservative number here, but at least 4 trillion.
Okay. Well, we got 7.5 on the sidelines. That's almost double.
Yeah.
This is COVID squared. When they lower rates, when they panic and they finally make that decision, that money was going to rush back in. And I'm telling you, Bitcoin is going to parity with gold. I think the first stop is the price of a single family home. And I think that's when people start to, wait a second. I took out a 30-year mortgage. I promised to work the rest of my life to own my house. Now it's actually going to be harder to own one Bitcoin. So I think that's our first stop, single family home. And then after that, we go to gold parity at $1 million.
Okay.
That was kind of an eye opener for me. It's like, wait a minute, that is crazy. So the analogy he made is that normally everybody is taking out a loan or mortgage for a house. And like, that's, normal, makes sense. It's the way that things have always been. So it's like, okay, I'm gonna get a 30-year, you get a 10, 20, and now the average is, a 30-year mortgage. And what he just stated is that it's going to be even harder to get one Bitcoin. So like, owning a Bitcoin is much more prestigious or difficult than owning a home. So when he's saying it'll become the parity, like once it gets to that parity of a single family home, one Bitcoin is equal to one family home, then it's like, oh yeah, this is what I should definitely be storing my wealth in, because historically, it was real estate. But as Bitcoin eats up that market and gets parity with gold, it's like, screw that. Because with real estate, yes, you have a place to stay, but this is something I need to do a video on. But if you have Bitcoin and you're able to borrow against it and it pays for your living standards, and it's like, yeah, why do you need to own the house? Because a house was meant to be just security and safety. But if your Bitcoin can get you that and then some without property taxes, and again, God forbid something breaks out in whatever country you're in, like we saw with Ukraine and Russia, you need to pack your home up and leave. Well, you can't. But if you have Bitcoin, then you can, because that house is nothing, it's not tied to you. You don't need it. You can easily go get another one in another place because you have the equity in a digital self-custodied asset. So it's like, yeah, it's way more valuable than an actual house. Now, you can't live in your Bitcoin, I get that, but you can pack it up and unfold it in a new location and get another house just as quick if you are stacking sats right now before all this shit hits the fan, so to speak. All right, let's go to the last piece, which I kind of mentioned about me stacking 80% in Bitcoin and then 20% in USDC. And that's what they're talking about here, with stablecoins being the Trojan horse to usher in new Bitcoin fiscal dominance as like the foundational monetary layer of finance, basically.
Energy Summit a while back, I asked him, I said, hey, on the Financial Services Committee, I know you guys are, look, this is what he admitted. There's a lack of demand on treasuries, right? So that's the main narrative right now. Stablecoins create demand on treasuries. Why do you need demand on treasuries? Because the more demand, the lower the interest rate's going to go. It's just another signal that they're losing control of the yield curve, and they need to figure out a way to create demand. And stablecoins are probably the most easiest way to create that demand. That's highly concerning.
I mean, Tether's the most profitable company by personnel on the planet, probably ever.
Yeah, absolutely. Well, it's a great business model.
Yes.
Well, I asked Byron, I said, hey, have you guys spoke about this on the Financial Services Committee? Have you considered this? If you pass this stablecoin bill and you allow people in the marketplace to choose between a bank deposit versus a stablecoin, have you thought about the consequences of that? Have you thought about the fact that when someone owns a stablecoin, it's backed 1-to-1? If someone has a bank deposit, you're lucky if it's backed by a penny. I mean, even in the best case scenario with the strongest balance sheets in the world, it's backed by 10 cents. So between a penny and 10 cents banking your back deposit. And by the way, this weekend's coming up. It's Sunday. Sorry, we're closed. Oh, and by the way, you're not allowed to buy that car unless you ask us permission, slave.
Yes.
So you're backed by a penny. You have to ask for permission. You don't have 24/7 access, and you can only take out small quantities before red flags get raised and they start asking you questions about what you're doing with your hard-earned money. Well, Byron, what happens when the marketplace gets to choose a stablecoin that's backed 1-to-1? You have access to it 24/7. You can move unlimited amounts without any questions whatsoever because it's based on a protocol instead of permission. What happens when all of those bank deposits go to stablecoins? And the answer he gave me, I'll never forget it. And his eyes, I'll never forget his eyes either. He's looking at me like,
oh shit.
Because, CJ, I don't think you're gonna like this answer. I don't think the people in the Financial Services Committee are smart enough to figure this out.
Damn.
So the people, they're so focused on, and you know what, I don't blame them. Let's make this clear. They have a tough job. They have a really tough job, and they're getting pulled 10,000 different directions, and their biggest problem is demand for treasuries, and they see a solution for demand for treasuries. But the second and third order effects are not really being thought of. So my opinion is, if this coin goes through, this is the Trojan horse. I always thought Bitcoin was going to break down the bank.
Oh man, wait, before you go on, did you catch Safe Dean?
I'll clip that there because I actually shared that with you guys about Saifedean Ammous at the conference as well, and he was talking the same thing about the depegging of Tether, or the USD to Tether, however you want to phrase that the value of the Bitcoin that they have on their books will eventually outpace the treasuries, and then it will depeg upwards. So this is kind of the same thing CJ's mentioning here, is that by them rolling in stable coins, they are basically creating a foundation for people to say like, yo, why would I hold dollars when you don't back my dollars? The bank is closed and I can't take them anywhere in the world that I want. So I'll just hold, and not to mention that the interest rate sucks. So people will be like, why don't I just hold stable coins instead? And we already saw that the legislation and discussions are for banks to be able to create their own stable coins. So they're seeing the writing on the wall as well. So by JP Morgan coin and Bank of America coin or whatever, being able to create their own version of a stable coin, Just like, oh, let me see if I can pull this up real quick. World Liberty Fi, they just dropped an announcement. Here we go. 4 billion USD1 just airdropped. Every eligible World Liberty Fi holder just received $47 USD1, excluding New York and certain jurisdictions. So they're already making their own stable coin. So this is the Trojan horse, because all of these stable coins have Bitcoin in their treasury. They are all playing the same game. Like Opti mentioned, that is the absolute best business model out there, is what Tether has been doing for the last decade. And they have, like, I think 60 employees or some small amount, and they are just arbitraging the difference between treasuries and the demand for stable coins in the crypto market. Like, it's insane. So now there's just, everybody's like, yo, I need to get a slice of this stable coin pie. Like, how many stable coins are out there now? I don't even know. There's a whole bunch, and more will be created, especially like I just mentioned, with these banks getting the approval to make stable coins as well. So it is indeed the Trojan horse, because that's going to push for more Bitcoin adoption by all these companies holding stables. Like, in order for them to stay liquid and invest, like, they'll be earning, how's the easiest way to say it? They're earning yield, right? So their business is profitable, extremely profitable. Well, what do you do with the profits? There's no better asset, company, industry, commodity to invest in besides Bitcoin. So every $1 billion of capital that they earn, they're just going to inject it back into Bitcoin, and that's just going to increase the Bitcoin price. Like, it just becomes a flywheel, and like you mentioned, they become the Trojan horse. So there's already a bunch of stable coins on here. This is insane. But as I showed you, Tether is just the beast that just cannot be stopped in regards to its market cap. But there will be others, like World Liberty Fi is coming up here on number 5 spot with 2 billion. So I don't know. Like I said, there was a lot of gems dropped in this video. I highly recommend you go back and actually watch their entire take and watch it again after that, because it was just gem after gem after gem being dropped. And I just don't think we're prepared. Nobody's really factoring in the magnitude of what's happening right now. It's because we tie it towards Bitcoin price action. And since we haven't seen anything dramatic take off, people just are kind of like that meme, poking Bitcoin with a stick, telling it to do something. But there is so much groundwork being laid that it's like, dude, take this as a blessing of an opportunity that you're able to continue to stack, and Bitcoin is chopping sideways these prices, because the sooner that it skyrockets, the faster we're going to be left behind, us wage workers and day-to-day grinders. And you're gonna be like, shit, why did I not get more Bitcoin sooner? And like I said, I believe you're not gonna find the lows and dips like we're used to from previous cycles, but we'll see. All right, that's all I got. Smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, lift daily and achieve your impossible. See ya.